All right, all right. Good morning, everyone. So this morning I wanted to kind of make this live stream. Now, the reason why I go live all the time is because if I make a video, I'm going to have to edit it and all that stuff. And, it takes some time. So I know like live, sometimes it's hard to get my thoughts out as well because if I'm kind of triple over my words, it's hard for me to take that back. But I really like that because that really give you, the viewer, a little bit of insight into how I think sometimes, right? So I think it has some potentially good things that comes with live versus pre-recorded video. Although, I wanted to do that as well because again, sometimes, one particular ideas, if you want to watch that particular one, it's tough for people to kind of weed through the whole live stream. So I don't know, maybe I will cut a few things here and there from a certain live stream if I feel like the point need to be reiterated and all that stuff. I will kind of snippets those segments onto the pre-recorded. But so if you want to, or I have another idea as well, is to have a timestamp on the description, but I have to go through every video and every topic, so it's kind of tough for me to do that at the moment. Just a small idea here and there so that you could jump from one spot to another, but with very easily jump to one spot to another or one topic to another if you only want to listen to that particular one. But again, it's just me thinking ahead here, nothing much. So I'll be right back. Let me put some music on and I will be right back. All right, all right, all right. I'm back. Thank you for everybody. Lynn, thank you. Lionel, yep. Hi, everybody. Just joining in. Not much today. How's everybody doing this morning? Got some coffee over here. Smells nice. Nah, just chilling. I feel like there's a lot to unpack here, but normally it's just the same topic here. But I was really thinking about been watching Moran's all day too. I was gonna just thinking about what this investment is going to be in the future, and I try to tell like anybody who I care about this company, that it is the best investment and all that stuff, and I'm trying to think of ways to really give them a full range of what it is, the origin story. And of course I steer people to Moran's channel as well, because he has a whole bunch of video out there that give you the best information in his own way, right? But sometimes because of his delivery and all that, I'm not saying that his delivery is not good at all. I'm just saying that it's some people resonate with other people much more. So I don't know, maybe I resonate with you a little bit more than Moran's, but my point is that people have different tastes in consuming information and stuff like that. So I was thinking that as I was watching Moran's and all that stuff, and just the investment itself, how lucky I am to find it here, to learn what I learned about the market, and come to this point in time. So, it's 3 years in the making, 4 years, going 8 years now since I've been in the market, since 2017, but not in Gamestop, obviously. I just got in a couple years back. I spoke about my cost average before. It's still in the 40s, but those portfolio is in my Roth IRA again. Like I have decades to cash out of those, so I'm not worried about the cost average being high at all. And so again, this is a long-term investment for me. And anytime I talk about GameStop to my coworkers and all those people that is willing to listen, I hope they get the gist of it. But yeah, so it's just me reflecting on what's going on in the market and what's going on in this company. So that's the whole topic. But also too, we're gonna talk about price again. Of course, price hasn't moved. It's a weekend. Of course, it's not gonna move. So nothing to say there. But is there a prediction, that we could extrapolate from here? Now, the Fibonacci, obviously, that's the most popular retracement tool, to see from the high to the low where it's at right now. Currently, we're at the 618, and typically this is the support level, right? That trader used to look into, and if it breaks down, it's more likely to come down to a lower band of 0.5, whatnot. And then what else? I mean, how low can it go? Who knows? Again, the price action makes no sense, right? Or really doesn't matter. But what kind of worth noting is this right here. The volume. it's getting back, right? Kind of pick up a little bit, but even with that amount of volume, it's still kind of low compared to the float of the company, right? So if you look at the daily volume right here, I think I told you guys this before, just in case you don't remember that. So on Friday, it was 10 million shares, and on Thursday, after earnings being reported and everything, it went up to 20 million shares. So 20 million shares is around what, 8% of the float, right? That's nothing at all. But if you look at the price action, 8% of the float give you this massive candle right here. And so this is why they scare. This is why people who are shorting this company is coming out of the woodwork on Moran shows, on every single, YouTube channel that is very small. I mean, to me, Moran's has been bigger now, but he used to have a lot less subscriber. I've been like subscribed to Moran's for at least a year, a little bit over a year, since Ape. When was that? Like, was that June of last year? No, a year before. But anyway, all I know is that when Ape comes along, that's when I started to kind of subscribe to Moran. So it might have been a lot earlier than that too, but that's why I have him on my feed, I think. But my point is that they would come out of the woodwork to try to sway people the other way, right? Even though there's only a couple thousands of us that are still here supporting the company. Now, when I said a couple thousands, it's probably more. It's just that they're not, perhaps they just don't know who Moran's is, right? And they just still believe in the company itself. Hi, Jay. Thank you for coming in. Gabriel, thank you. Appreciate you. How's everybody doing today? Lynn, I can't wait to play. I know Grand Theft Auto. So I've never played that games before. I know like it's kind of like fun to kill humans and stuff like that, but I'm kind of scared to. But I'm kind of looking into that. It looks sick though, like the graphics, the realistic. But we'll look into the trailer for that too. So if anybody for whatever reason doesn't know what Grand Theft Auto is, I know Lionel doesn't play games, so he doesn't probably would want to kind of see what that is. It's actually a game that you play, and you get to shoot people, you get to do everything if you wanted to. It's a fun game from what I see, but we could take a look at it later. But anyway, so what am I saying here? Well, to me, this retracement, what is it? The retracement, the Fibonacci retracement usually is a tool that trader, or I bet you anything, the algorithm is looking into this too. So, like monitoring it pretty closely in order to fake people out, right? The minute you think it's going to go one way, it's going to go the other way. And this is why, trading is so risky, is because you could get in on the wrong time and then, not even thinking about the long-term value creating of the company, and you just price action day to day type thing. So again, I keep reiterating to people who wants to do day trading, it is risky. If you know when the price goes up, but if you know that there's volume being picked up, but nobody knows except the insider. I'm not talking about Gamestop insider here. I'm talking about the people who allow this trade to happen. And so you won't be able, anytime they do trading, because they're not aware of the nature of the market, right? And so again, long-term investing is a thing to go, and all you have to do is just watch. Watch Moran's, right? Watch me. No. watch people who are actually steering you to the right direction of, what is the actual company doing, and, watch these people, sure, but take it with a grain of salt and verify the information that they give you, and all that stuff. So we'll go to that later on. So let me finish this thought real quick. So my thought is that if there is a lot of volume coming in, people realizing what GameStop is on Monday, it could exceed this level right here, which is $26. And then the next level that is kind of resistant, which it has no real resistance here, so to speak. So I think 26 is not impossible at all, in my opinion. So that's a retracement. But again, I might draw this wrong, and then perhaps like this, because it's the body of the candle. I don't know. This is a daily candle, by the way. So yeah, I'll leave it up to the professional. Who knows to do this better? But my thoughts too is that this level here, I'm sure they're going to try to smack it down too. Every time it hits this level, it's about to go flip to support. They're going to try to kill the momentum too, right? They've been doing this for a long time. So I'm sure there's an algorithm trading computer that monitor the GameStop price for a long time. And they know when to hype it up. They know when to hype it down. But they can't help it because the fundamental of the company, that's another thing. Like fundamentally, company is doing much stronger. So they can't do anything. If you wanted to smack it down, you have to tame the excitement of people who are enthusiastic about this company because of the prospect of what it could be now. More and more people, I bet you anything, the billionaires out there who was not in this play in the first place are paying attention right now. And to me, Ryan Cohen is a valuable human being here. And, I think they're not going to do anything to, I think high performer, you never see people like Ryan Cohen. Like people like Ryan Cohen is a one in a million type of personality here. And the fact that he's already been successful in whatever he put his hand on, or a track record anyway. Of course, the news media is trying to say that Chewy's is down now, and therefore, GameStop, they compare that, right? The Chewy did an earning, was not as strong, and so it went down like 9% in a day or something like that. And so they kind of couple that with GameStop's too. And currently, I don't know who owned Chewy. PetSmart, right? I don't believe they have sold it to any other entity. Jay, let me read. Gabriel, can you talk what's your prediction for GME price? You have a good prediction. Me? No. I would not. I don't know. I mean, again, the price action could be anything because we don't control the price, honestly, the market structure, the way that I have learned is that it's complicated, and it's due algo. If you understand the dark pool nature of things, I'm not knowledgeable about this at all. So I'm flattered that you think that I would have a good prediction. I'm just doing this just for fun, honestly. And don't take any trade based on anything that I say. To me, again, long-term investing, buy one share at a time. That's always a good way to go. Less stress, you could go about your day. doing whatever you do, you know, working or whatever, walking in the park, you just like mindlessly buy one a day consistently. And if you do that for, you know, a couple of years consistently, you know, you're going to make something out of it. And to me, I told somebody at work the other day, actually, it's like, look, if you want to get into this company, make sure you think about it in the long-term perspective here, 10 years or more, you know. And I told people at work, it's like, look, this is a once in a lifetime opportunity here. And so any price at all that, in my opinion anyway, that is lower than what Ryan Cohen bought in June, back in June, is a steal, right? Ryan Cohen bought at 22. Let me remind people here. Ryan Cohen bought at $22, $10 million of his money doing that, right? And I know people try to think that, or try to paint it, $10 million is nothing for this company. I mean, 10 million is 10 million. So, you know, that means something. And it signals to the investor that Ryan Cohen is in here for the long term. He's not in here just to cash out. And he's here to build a legacy here. Okay. And so if you don't give a man at least 10 years to try to, you know, make things happen, you're not giving him any respect, so to speak, you know. And this is why the media just going after him for no apparent reason whatsoever, you know. And I've talked about this before, where when they were about to promote Chewy, right? Oh, the press was stellar about how Ryan Cohen was a success. You know, the fact that he was able to beat the price right here. Okay, let's juxtapose. Hold on.
Founder and former CEO who organized the sale to PetSmart in 2017, Ryan Cohen. Ryan, congratulations.
Well, just listen to it. I don't want to do the acting.
So you're not a shareholder in Chewy.
No.
But I would imagine you have a lot of feelings about seeing this company that you built starting in 2011 go public today.
It's a very, very emotional day. It's humbling. It's the culmination of 8 years of sacrifice, dedication, lots of hard work, an amazing team. It was far from an overnight success. And, you know, see it today is just incredible. So I'm very proud.
One of the things that's been coming into focus in terms of this IPO is how much capital is being raised and how much of that capital is going to go back to paying down debt at PetSmart versus back towards operations at Chewy. What do you think about that?
Yeah, I mean, I can't speak to exactly the capital structure, but what I will say is that it's a capital-light business and it requires very little to engender its growth. And so,
you know what? Sorry, this is distracting. Let me try to find that particular. Give me a minute. I mean, I've shown this interview before. I just want to refresh people's mind here of the difference between when they try to promote something that they want you to buy into at a higher price, a higher valuation, because they want to make money, you know, 5x at the onset of the IPO. That's why they were promoting it. And hold on one second. cnbc. Are you guys? Okay, found it.
Founder and
so let's and I want you to focus on like how the you know, the reporter kind of asking questions and all that stuff, right? And it's a very positive tone to that interview right there.
Been free cash flow, and so we've always been very disciplined about that.
You yourself had a nice exit a couple years ago, got some free cash. Are you investing in IPOs this year?
Not any yet.
Another question specifically about the pet business. Omnichannel is big right now, blending physical and digital retail. Given what's happening with premium brands and treating pets like people, if you were doing that, would you do it in urban areas, or would you do it kind of in the suburban strip malls where the Petcos and PetSmarts have been in the past?
I really think it's all about creating an experience for the customers. And so if you're going to, invest in physical stores, it really needs to be focused on delivering an experience where people want to bring their pets into the store. And so I think it depends on the category, but to the extent that retailers are focusing on creating an amazing in-store experience, then I think omnichannel strategy can make a lot of sense.
You sold for $3.3 and you got a $14 billion market cap today. Did you not sell for enough, or has there been enough growth since then to validate today's market cap?
Yeah, I mean, I think, we were, at the time, we were running a dual track process, and it felt like a fair deal to us at the time. It worked out really well for the team at Chewy. It worked out really well for the shareholders at Chewy, and I'm glad to see that it's working out well for PetSmart, so I'm very happy.
I love the story. Your original idea was jewelry.
Yes.
Right? And what switched you to pets, and are you glad you didn't go into online jewelry?
Well, yeah, I mean, we weren't very passionate about the space. I was at a neighborhood pet store one day with Tylee, my poodle, and it was an amazing experience. And so I had an epiphany that if I could really recreate that experience, but do it online and at scale, and you think about all the small things we've been doing since day one, right? The handwritten holiday cards and the pet portraits and the flowers, and it's really bringing a face to e-commerce. And so we were able to differentiate ourselves and build a really big business. And the vision since the beginning is really to build the largest pet retailer in the world. And it's been an incredible journey. A
lot of folks like to point to the ill-fated Pets.com in the late 90s, early aughts. I mean, that was the example out there, the biggest example out there, I think, when you were starting the company in 2011. Why'd you still move forward with this model?
I'm contrarian, and so I think that created really white space where you didn't have that many people going after the category, and so it created a big opportunity for us. Having said that, it was a low-margin business that required getting to scale in order to make the economics work.
How much does fast delivery matter in this category? Because you got heavy bags of pet food often. People know when they're getting close to the bottom of one. And for Chewy, the subscription delivery has been important. Does it really need to be that fast?
Yeah, I mean, I personally think so. I think within e-commerce today, it's really table stakes to perfect that flywheel of fast shipping, being competitively priced, and then having the selection. And we really differentiated ourselves by being the category experts and, really bringing a face to e-commerce. And really, at the end of the day, we just happen to sell pet products. Frankly, I think, if you're in the business of delighting your customers, I think that you could be very successful, and I think we would have been successful, frankly, in any category.
Talk about a little what you know about, say, my pet. Right? You probably know how much he eats per day, and thus when it's time to order more food, when his next checkup is due. Is that all wrapped up into various algorithms you have back home?
Yeah, absolutely. But I think that we try to create an experience that's really frictionless, and so whether it's the one-page checkout or just all of those things, we don't want to inundate you. We figure if we deliver an amazing experience, you'll come back to us, and then we go and we do all of those small things that really create that wow experience, and you tell your friends and family, like, this is the best experience, this is where I need to shop.
So it's not a shower of notifications and taps on the shoulder.
Exactly.
Right? You're looking for the consumer to touch back themselves.
Totally. Exactly.
I want to go back to the delivery piece of this for a minute, because one of the things I found fascinating in reading about the history of the company is the fact that you actually built out fulfillment centers.
Yeah.
A lot of e-commerce companies actually outsource to third-party logistics companies. It's been a big opportunity, obviously, for Amazon, XPO, UPS, FedEx, et cetera. Why did you go down that route, and how does that set up the company for future scale?
It really is hard to scale. The vision since day one was to build a multi-billion-dollar business, and so we weren't experts in fulfillment. In the beginning, we were using a 3PL. It wasn't scalable, and so we had to become experts. We had to make it our core competency, and we brought fulfillment in-house in early 2014, and we never looked back. And today, when you think about fulfillment at Chewy, it's world-class operations. We've got 7 fulfillment centers.
What part of this business is sensitive to the economy? Do people, they're not going to stop buying food for their pet, but do they buy more expensive food or maybe more treats when the economy is good and then scale back? How does that work?
I think we've really have the tailwinds of just the shift from offline to online, and then the humanization of pets and the market moving up and average selling price moving up. And so if you look even during the Great Recession, the industry grew, and it's a $70 billion TAM today that's growing at roughly 3 to 5%. I think the last thing people typically are going to cut back on, even during a recession, is their pets. And I think what's even more durable is really the consumable part of the business, which makes up a big chunk of Chewy's revenues.
There you go. So I hope you learned something there for people who are still skeptical about GameStop here. Now, I know this is about Chewy, but really this segment here, the reason why I show you that clip is because I want you to see the difference between the interview Like the people that are still till this day, the same people that was interviewing him then is now turning a different tune, right? The difference is that back then they want to promote Chewy because Chewy was not retailed fueled. Okay, they PetSmart already bought it outright, right? Of course, PetSmart, is probably promoting that, or PetSmart is part of their, portfolio, Chewy was part of the portfolio because it was being sold to them. And Ryan Cohen, I think in one article, he said that he was the CEO back then, and he quit after a couple of years because he doesn't want to, like what he set out to do, he already did at the time for Chewy, and he doesn't want to work under anyone. And so that type of personality is valuable. It's valuable for people who understand that type of like drive, motivation to be your own boss and to have that control. Now, of course, if you believe in his vision to bring GME to the at least a higher valuation than it is currently in 5 years. So I think I misread what Gabriel. So Gabriel wants to know what's the price in 5 years. Who knows? Like, I mean, to me, I compare it to Tesla, right? If you look at the Tesla price action, you wouldn't know. Nobody could imagine that 15 years ago you could buy Tesla at $10, and now it's like hundreds of dollars or thousands of dollars. And remember, Tesla was doing split after split after split too. And since then, it's been, kind of weaning down on the other end already. So overvalue to the point where it's overvalue. And to me, that's the reason why I compare Tesla to that, is that CNBC back then promoted Tesla, no, not promoted Tesla, sorry, was advocating for people to just hold it for the short term, just trade in and out. This is not the stock for you to hold for long term. And guess what? It's the opposite, right? And so they always steer people in the wrong direction, right? And that's what's the point of the media is to do that. So I appreciate your question though, but again, I mean, thousands? I mean, $100,000 a share? How about that? I mean, Berkshire Hathaway is like 300,000 right now. So I mean, the sky is the limit type of thing. And also, I think they are going to be categorized, focused. They're not going to just, buy any random companies out there. Of course, it's going to be focused on gaming, I think, because he's lasered focus on that category killer type thing, right? That if Amazon killed the sector of gaming, you could beat Amazon in that sense too, because you are promoting service-based, delight customer, those terms that actually the playbook of Amazon. Like, as long as you make the customer happy for whatever, it's worth, you're gonna occur more and more, membership, rewards program, always telling them what is going on with the gaming industry, right? And I think I showed you guys that one before where Larry Chain here. And of course, look at this. Really? Oh, Morantz was like, wait, this is the 7th, day after GameStop report earning. I'm going to give away free to one of the Twitter follower, 2 tickets to whatever. So he's trying to, engage people of what Taylor Swift concert or something like that to New Orleans. Looking for a free advertisement in this time, all the while offering free ticket. That's so funny. But anyways, of course, like, wait, why am I here in the first place? Oh, okay. Back to GameStop. Sorry, I'm kind of distracted a little bit here. But what I was saying is that they are keeping an eye on those big titles out there. They just did a gaming reward show. It's pretty big, right? It was live streamed, and every single minute or so they were updating. Okay, who's the biggest winner for graphics, for they have different categories, just like the Oscar, right? Supporting actress, lighting, and all that stuff. So yeah, I mean, the industry is big. It's really big. It's becoming the biggest entertaining now, and like, it's as I feel like in a few years it's going to be as big as the Oscar, because we don't care about actors like we used to anymore. So now we're caring about games. Which the most realistic, which game is going to win billions of dollars, worth of sales and all that stuff. So, and GameStop is aware of that, of course, and to inform the customer in that way is valuable. And this is the little tiny things that, the new media, the news doesn't want you to see. That and that's why they always steer you to, like, oh, they're just selling Funko Pop, those little tiny figurine things. It's like, really? Are you a child? Is that the only thing that you could talk about GameStop at large? Okay, let me read Jay's comment here. I call bottom anything under 12. Okay. By mid next year, we will be sitting at 40 over 40. Okay. Just on the fundamental, it's squeeze and break 65. Then we retest 120 and 130. Okay. Late next year, by 2026, GameStop will be over $200. Okay, there you go. The prediction is here. You hear it first. Jay is very knowledgeable about trading, about what's going on in GameStop, and he's been a supporter of this channel. So I appreciate your prediction there. Yeah, I mean, again, I don't know. Like, for me, price, anything under what Ryan Cohen bought at the time is a good buy for me. So that's why I tell people, one day at a time, one share at a time, couple shares at a time. Don't overextend yourself, and just do it consistently. Whatever you're comfortable with, $100 a month, do that too. Whatever comfortable to you, that you're not, going to need to sell the shares if the economy is not doing well, you lose your job or whatever, you at least have some plan moving forward, right? And so you do all this step in order to not be stressed out about if the price coming down. Let's say you bought it at this price and immediately it drops like this, right? I'm not saying it's going to do that, but if it does that, prepare for the worst case scenario. Are you going to panic sell your share down here because you absolutely need to sell your share in order to survive? You don't want that. You do not want that, because you are selling something that is valuable than what you are selling it for, because you need it, right? Think about people who have to sell their house because they overextend themselves, for 401k, foreclosure and all that stuff. So it's not a pretty thing, And so if you could prepare for that, then you're going to set yourself up for success when it comes to GameStop trading, or GameStop investment, right? or any type of investment. It doesn't have to be GameStop, you guys, you know. But yeah, so according to Jay, we're gonna hit over $200 in the year 2016 on fundamental alone, right? Are you saying that, Jay? So that's just the fundamental. That doesn't include the short squeeze and all that stuff, right? But yeah, to me, the leadership worth much more than this. I mean, let me finish my thought earlier. Ryan Cohen is valuable. And so, you know, anyone who wants to invest or know him, gonna respect him over time, though, because of just how he conducts himself, right? And I bet you anything, all the billionaires out there who's sitting on the sideline, who never thought of GameStop before, is gonna be eyeing it right now. So eventually, these new media people who shitting on GameStop over and over again, they're gonna flip their script. They're gonna not only promote GameStop, but they're gonna be like, "Oh, we were wrong," you know. And I bet you anything, these people probably will not care at all about the narrative. Like, oh, now I'm supposed to be positive? Okay, let me be positive about GameStop. So again, they don't have any integrity. And so that's why I don't respect any of these new outlets at all. They just, whatever pays their bill, they're going to just spew it out. So, oh, okay. So let's look at, I'll show this one. Well, okay, look at this guy. 1 second, okay? Now, I know I make fun of this guy a couple of times already, but it's ridiculous. Let's listen in. For those of you who hadn't watched this one, let's listen in, and I'll be back.
Think the pet trade is whimpering out. I get it. I see what's happening there. We'll move along to GameStop then, which is down nearly 20% this year, but coming off a retail-driven rally at the end of November. Obviously, it's been levitating. Wedbush watching the shift from physical to digital download games and softening holiday demand for other hardware like the Nintendo Switch. Retail investor activity, of course, always a driver of the share price. What do you do with this one, Lee?
I'm going to try to be mature about this meme stock. Let's look at the last 5 years. Our compounded annual growth rate is -7%. Our cost of revenues is going up, not down. So they have got to pay more and more to make a.
Okay, so this one, when was it reported? Is this after earnings or before earnings? Looks like it's on the earnings day. So now, what I've noticed right away, obviously, I haven't pointed this out earlier, is that they are only showing you the expectation, right? And I'm trying to find a new, kind of a new coverage after the earnings. Shouldn't they be showing like that they're doing a better, like, beat expectation here? Unless this is like a preview to the. It was reported before the earnings come out, so perhaps that's why they didn't show the number that we got.
$1. When you look at the only thing that grows about GameStop.
Wait. Gross profit stringing? What? Stringing and 3 times. Is that how we're doing things now? Like, to try to like enchant people to keep thinking that GameStop is terrible. Of course, this is untrue, obviously. So let's.
Over the last couple of years is the collectibles line, meaning that the place where they really do well is selling more Pokemon cards and what are called Funko Pops, which are these little plastic doll things. But when you look at the ads and you look at their website, it's not about consoles, it's not about Fortnite, it's not about Call of Duty, it's about little plastic figurines and trading cards. Everything else is going down with this ship. They even, did they even get a COVID bump with all that stimulus money? No, they couldn't even do that right. So I don't have a lot of faith in this company. I'm not saying you should go short it because, again, it's a meme stock. What I would do is I would walk backwards and walk far, far away and find another company to buy.
All right, you're doing the moonwalk away from that one. Maybe.
Oh, mysterious. I'm so scared. Wait, hold on. Let me see. When did he say, like, get the name wrong?
I'm going to try to be mature about this meme stock. Let's look at the last 5 years. Our compounded annual growth rate is -7%. Our cost of revenues is going up, not down. So they have got to pay more and more to make a buck. When you look at the only thing that grows about GameStop.
He said GameStop, you guys, GameStop. But anyway, enough making fun of this guy. But yeah, his demeanor changed, right? Every single reporter, you know, they're not as warm and fuzzy anymore. It's like the facial expressions say it all. And these people are actors, you know, they're good at delivering lines and stuff like that, right? And that's why they're there. They're being put there. Perhaps they are really think about that. But anyway, so what he's saying about GameStop website is not true. You know, what is the first thing that you see here? It's about gaming, new games coming out, you know, pre-order and all that stuff. Funko Pop, the second one, you know, yes, there's deals here and there, but yeah, there's no mistaken about it that they're selling console, and that's the first thing that you see anytime you are on their website. And so to say that it's just somehow they're here, the first thing you see is just the Funko Pops and the last, and it's again lies, right? They're lying to the audience here. Let's see what else. Okay, so let's get to I don't know why I kind of want to look into Chewy. Why was it down and why is it not doing well, so to speak? Now, Ryan Cohen is not in here anymore. Just to be clear, he's not in here anymore, but for some reason, he's still attached to this. What the news is trying to tell you, since Chewy's doing worse, now therefore, GameStop is doing terrible as well. And this is how they do it, to psychologically associating bad things to a certain thing. It's like call character assassination, right? Just call them names like meme stock, and you know, and look back, like look back at the last 5 years, right? Okay, I mean, you might have some point there, but again, last 5 years, Ryan Cohen wasn't in there. He's just in here for the last 3 years. So if you want to be fair, compare it for the last 3 years, because the man was not involved 5 years ago. See what I mean? So, and that's what most people don't realize, is that most people who are not in display, who are not into GameStop, do not necessarily know the full story of what happened in GameStop. Now, they might go and watch, what is it, Dumb Money, that movie there, and might get some, you know, idea that, oh, the only reason why GameStop went up like that is because of people just buying up and up and up, right? Not understanding that there is a catalyst, and the catalyst was Ryan Cohen. Ryan Cohen is the catalyst for that run, because we know now Ryan Cohen's going to put his all into making this company better, right? And he has been demonstrating that. Like, again, that's why they're so scared now. Okay, so right off the bat, usually I looked into the inside ownership for Chewy right here. Only less than 2% right there. And this is institutional ownership usually is higher there, and I think that's why they kind of try to put it in the forefront of people consciousness through the news media, to try to like, okay, keep an eye on this company. What did the guy say about Chewy? I didn't play that part, huh? But so right off the bat here, debt to equity ratio is a lot more debt than equity. Debt to EBITDA 3. Debt to cash flow, not too bad. Not too bad. Look at this, interest coverage. This is a telltale sign that it's not good, because they don't make enough money to even cover the interest payment. Okay, and that's why it went down. let's see. Well, at least there's some profit, a little bit better than GameStop if you want to compare that particular metric. But look at the capital expenditure. It's close to $200 million there. Effective tax rate went up pretty high there, which is, I mean, why is it so high for Chewy? You know, you see like Amazon paying like 5% or something. Very low, but maybe they don't know how to do the tax trick. And let's see. I mean, the profit margin is pretty slim, razor thin, so to speak. Free cash flow, I mean, that's good. At least they are, you know, cash flow positive. They're not technically losing any. Net income, $11 million. For a company that does $11 million a year, that's twice as much as GameStop. That's nothing, right? And of course, all the analysts out there want you to buy it, right? They want you to buy into their debt, okay? I don't respect these people. See what I mean? Like 21 stock analysts want you to buy this, okay? Time and time again, you see stuff like this and you're like, again, they don't have any integrity whatsoever. Okay, so let's look at the debt level for Chewy here. So general SG&A, oh my god, I can't even say that. Up about 70 million there. Operating income, of course, they're become more expensive there. So I think you see how like this is how they do it, the news media. What they do usually is they associate it, you know, and they pick Chewy for a reason, to make you think that since Chewy increased in operating costs or expenses, therefore GameStop is also going to do the same thing. And it's curious to me too that they don't have anything after that segment about how GameStop is doing. I'll show you in a minute what I mean by that. So this is a trailing 12, obviously. So $11 million. So it went down, you know, kind of slowly stepping down there. The interest expenses right here, $14 million. I'm still looking for the debt right here. So the balance sheet, goodwill value, there's some goodwill value there. Not too high, not to the billion at least. So, but the fact that they add more, it seems like last year they add $39 million to the goodwill value. If you were to subtract that from the shareholder equity, it's around $300 million shareholder equity. So at least shareholder equity is in the plus. But if you look at the retaining loss, it's close to $2 billion retaining loss. Yeah, so of course they're gonna compare this to Chewy. Again, Ryan Cohen is not in this anymore, but yet they still, you know, guilty by association type thing. And you know, it works for the most part if you don't know what GameStop is. If you never, you know, invest in GameStop before, or just heard it through the grapevines out there, oh, it's just a meme stock, right? And that's another thing too, like they called it meme stock for a reason, to sway people away from it, to say, as if to say that GameStop is not a good investment to have or to invest in, and not to trust Ryan Cohen because look, Chewy is down, right? Stuff like that. So they do have how much debt? I forgot to look. Long-term debt, $500 million, $526 million. Capital expenditure, 10 times is what we spend here on GameStop. So, well, no, working capital, sorry. Working capital is in the negative, although it's trending to the right direction again. So that's not too concerning. I'm not saying that Chewy is going to go bankrupt anytime soon. I'm just saying that currently, at current trajectory, okay, they can't seems to pay right here. Coverage, interest coverage is in the negative, meaning that you want it to, and then you see this is not a risk for this score right here means that they're not at risk for bankruptcy anytime soon. But if their net income coming down or net cash turns negative at some point, it's going to be in trouble. But currently, again, everything is fine. It's just the revenue is down, I guess. Hold on. Why did they say income? Okay, revenue is up 20% there. 12%. Why was it down? Expectation. What is the profit margin for this one? Gross profit margin. Oh, okay, 28%. What is GameStop now, I wonder? Sorry, I should know this by heart, but I don't. You know, it's a learning progress, you guys. How's everybody doing? North Star, you are welcome. Love your content. More people need to subscribe. Oh, thank you, North Star. I recognize you. You're giving Morant a hard time. So I don't know. Are you being sarcastic here or what? Let's see. Jay, if junk like HKD, yeah, can squeeze to $2,500 on garbage, then something really valuable like GameStop that has crazy strong fundamental and shorts has to liquidate to force close, then yes, I totally agree with that. And that HKD thing, it was just a fluke too, right? I think they're just overinflating the price and try to pump it us, push it to retail to buy it at a very high value where, right? And have their body say, hey, buy this, I'll buy this from you at a high valuation to overinflate their portfolio, right? In order to to show collateral, higher collateral. Again, it's fixing the book, right? It's their way of fixing the book through, foreign relation type thing. And it's like you scratch your back, I'll scratch mine, right? Type thing, I'll scratch mine. I'll scratch your back, you scratch other people's back. My brain. This is just how my brain works, you guys. I'm sorry. But anyway, so EBIT is down by 43 million. EBITDA up, kind of still in positive, but to me, Warren Buffett said it in one of the interviews that EBITDA is actually a overinflated price because it's actually showing loss at a less level than EBIT itself. So we really want to look into this as being positive for you to evaluate. It's like, oh, if you just see positive here, that's it. No. You want to see this number being positive, at least, don't just invest in something that doesn't say that. Cash flow positive. So let me see. Oh, this is GameStop. Sorry. So GameStop here, of course, was still kind of lower, that one. Expectation. Again, this is going to be fixed in the next quarter. I'm sure of it. I'm just saying that, this is in the right direction, but just because it's positive doesn't mean, the moon here, I'm just trying to tame people's expectation here. At least through the number that I'm seeing. So GameStop have a better interest coverage, although last quarter was showing a lot better interest coverage. Not quite sure why it's going down so much there. Perhaps because we're close to the positive thing already. Positive earnings, so maybe it skewed the number a little bit more. So currently we're losing some in the employment there, profit per employee, so we still need to work on that. It used to be $6,000 per employee, so we wanted to scale up there. As far as tax, we didn't hardly pay anything this quarter because we don't make anything quite yet. And I think, that's the whole reason to me, is that if you show a loss, a small loss, not to the point where it's alarming to the people that actually know how to read the balance sheet, but to show a loss is to not paying tax, right? You much rather using that tax money by showing the loss to beef up on the inventory instead of paying $200,000 or $1 million or whatever, right? For that particular quarter, it's better to use that couple $1 million to buy inventory, right? So when you buy inventory, you are actually trying to make more money. North Star, I like Moran's. I just give him a hard time because he tell people buy the stock. Tell people buy the stock. Okay. I mean, it's relatively, right? And, I understand that. Sometimes you give people a hard time just to give people a hard time and have fun with it. I understand that. I appreciate you coming in. Telling people to buy stock that yourself have bought is illegal. It's breaking the law. Oh, okay. I did not know that. How about the news? But I like the stock analyst. Stock analysis. Okay. Appreciate you. I think as far as like telling people to buy the stock when you own it is illegal. I think if you tell them ahead of time that you own it and you're just here to analyze the stock based on the number, how is it against the law to do that? Can you point me to that law? It's like what section or what number of the law? If you could. I could do my own research here, but let's move on. Okay, so the market cap of the company here, this is GameStop. We have been looking into, and this is for me that kind of give me a comfort there, that the inside ownership is a lot higher than any company that I've seen before. I mean, Chewy was like less than 2%. And while here we see over 13%. I think this number should be updated because, the percentage is probably a lot higher than that. But I could just go with this one because that's all I have access to. But there might be other website that tells otherwise. Currently, there's still the same amount of short interest, 22%. That's a lot. That's hell of a high. Okay, short percent. Now, people would tell you there's a good reason why the short interest is still high for this particular company, because they, bet on the demise of this company. And of course, we see that the analyst is even scared to mention the name GameStop. So it seemed, right? One analyst, that's it. That's what prompted me to do my own research, is that, like, it's ridiculous. Why there's only one is willing to speak at least to the number, and not fluffing it, not overhype, not underestimating it either, right? But anyway, net cash still the same, working capital still the same, cash on hand. We all know this. I'm speaking to the choir here. Capital expenditure close to $38.8 million. That's not too bad for the last 12 months. Gross profit a little bit higher. Used to be like 23, right? Hold on, let me go to a different one. So this is a trailing 12 revenue. Of course, if you add all of the 12 months so far, we're down 4%. 4%. Is that indicative of, I think it's more to do with the economy than anything, than GameStop, and the fact that they have closed down a lot of stores, and so they're actually doing better, making more money per store. And I'm betting anything he's going to try to cut a little bit more in order to profit off of the next 5 years, right? Gross profit, down 10 million, while your sale is down 100 million. That's a good thing. It's against the SEC regulation. Okay. I could respect that, sure. Okay, so let's see. If you look at the income, operating income, so we are down by, what is that? Year on year. Hold on. Freezing, really. Okay, so $81 million right there. Net income, again, 8. This is year on year, negative $8 million. Wow, that's a lot of loss. Like, you should sell this stock right now. I don't know. So, I mean, to me, I just think that, the value of this company is in the leadership, and the direction of that cash on hand as well. To me, that is more than anything, in my opinion. Okay, and then we saw this already. Of course, we still need to work on this, massage this number right here. And I think, come Q4, we're going to do that. But if you look at the swing from here to here, EBITDA, right? That's a $250 million right there. And back then, we have higher sales, general sale. Hold on. SG&A. Right here. Where did it go? We had lower profit margin, so to speak, or gross profit margin. So if you look at right here, sorry, it's up. Like, it's right in my face and I'm scrolling up. So it used to be 23% gross profit margin, right? So that means something, right? So if you were to do that analysis here, boom, boom, right? That's 160, right? And then if you kind of increase that by 1%, or maybe a little bit more, 25, hopefully, he's going to continue to cut, right? So what is that the difference of? Times, let's say, let's do it this way, 1.1% more. How about that? 250. I bet 250 swing. How about that? So 265. I think that's reasonable. What I'm saying is that it's going to be on the plus side, perhaps because of this. So in that, if you were to minus this amount, you would get 222 on the plus side. That's my prediction. What do you guys think? So for the EBITDA, or EBIT anyway, 222. I think that's pretty reasonable to think. Again, that's a low park there. Okay, let me take a little bit of a break. I'll be right back. Wow, I've been babbling for over an hour. But yeah, I'll be right back, and let's enjoy some music here.
Sometimes like all you want to do is run.
lost a whole bunch of people. Okay, that's fine. If you want to continue, I have maybe, how long has it been? Maybe half an hour. Half an hour. Stop. Okay, so my original thought was to kind of like bring you attention to, this is before GameStop run, okay? And this is the hit piece that happened before that. So if you look at the publication for this particular video, this is from the same new channel, okay? CNBC. October 10, 2020. If you look at that particular date, October 10, 2020, this is a weekly candle. Let's look into a daily candle right there. Okay, so we have daily candle right here. So that particular video was published around here, October something, October 10th. October 10th. Okay. So October 10th was Saturday. That's why you didn't see it. October 9th was Friday. And you see, when the stock was about to go grinding up, they publish this report right away, or this particular segment on their website. And it's very telling, right? Why would they do that? Number one. Now, if you were to look into that particular year, October, I don't remember when they I'm looking for, how about annual? Let's do annual. Probably easier. 20 right here, okay, and then 20. Sorry, I'm trying to look at the report, or at least that earnings for that particular week. October. Usually we reported this one. How about this one? So the earnings for this year right here, okay. So the earnings for this year, not too bad, 50. So around this time frame here. So what are we doing there? If we look underneath, we were at 28% gross profit there. Not too bad. What are we losing? Anything we're losing? The gross profit right here. So there's something there. What is this one? Is this the net profit, or hold on? I keep scrolling. Okay, so this is the net profit at that time. 2020 October. 2020 October. I wish there's a better way to show you guys this rather than scrolling. Okay, so down about $300 million, right? 300 million. I promise I have a point, so stick with me. Okay, and then what is this one? It is positive. I think that's cash flow, right? Free cash flow. So we were actually free cash flow back then, but we're still reporting negative, $300 million. And this is when Ryan Cohen hasn't gotten in yet, okay? Ryan Cohen got in late this year, around this quarter right here, 11, right? If you look at, okay, give me a minute here, look at that chart. So the report came in, then Ryan Cohen wrote the board of director around November 16, I think. And then he bought more around December or so. I think I had it in the other video, but so Ryan Cohen got in here after this report, okay, after that particular segment right here. And so there's a reason why they want you to think that way. But I want to look into what was the shareholder equity for this particular quarter right here. So 2020 shareholder equity for 2020 October. Shareholder equity. 2020 right here. So, right? So around 2.6, but then I want to see what the goodwill value for that one is too. Goodwill value. Any goodwill? 0, 0, 0, 0, 0. No goodwill whatsoever. So no goodwill, but the shareholder equity was a lot higher than today. Now this is a trailing 12, not the year on year. So bear with me there. I should do another pre-recorded video on this one because it's kind of important to kind of take a look at it. But the reason why people were like, well, the news media was doing things intentionally to try to steer people away from this company is because of this reason right here. You see, like there's some value of this company still left even after goodwill value being decimated, right? Yes, cash on hand was low, but that's why they were smart to dilute at the time because the price was, well, if they dilute at the time, it would have been a lot worse. But Ryan Cohen got in after that. And, you know, I'm sure Ryan Cohen has some influence in convincing the board of director to sell shares at the high price, at the market offering, not doing things like what Adam Aarons did, where he would go behind closed door to sell a chunk of his company to the enemy, so to speak, right? So they GameStop did it right in a sense that they do it at the market offering at the time to retail. Yes, retail bought in at a high valuation, but now you have a great company to go into to continue to thrive, right? Yes, retail did save GameStop, but Ryan Cohen make it a lot better. Was the catalyst for that. So anyway, so that's my point, is that you have some shareholder equity right there. If you look at the book value for that particular time, it was $1. Okay, but the news was saying, oh, it's overvalued. But guess what? Look at this one here. If you look at the cash position, it was at a loss, sure, right? But that's not to say that they don't have a business model that worked, because cash flow positive was a lot, even much better before that, when they were shorting this thing to the ground, right? So even then, they had more shareholder equity. And this is when goodwill was already at 0. So again, there's some value in this company. That's why, I'm sure Keith Gill saw it coming too at that time. And so they had to put out this article or this segment right here. So let's play that one and listen in. I'm going to speed it up a little bit so we could get out of here.
Indoors and craving entertainment thanks to lockdowns across the country? You think that video game retailer GameStop?
This is too too fast. Sorry. This one.
Would be thriving. But the coronavirus pandemic has decimated the already struggling chain. GameStop's core business is selling new and used software and hardware to video game enthusiasts. But the video game retail chain has fallen on hard times. Even before the coronavirus started, gamers had already begun a shift from buying packaged software at brick-and-mortar stores to downloading games directly to their consoles. Apple and Amazon have shaken up the status quo too, attracting consumers with new streaming services that don't require physical consoles, making it easier than ever to game.
It's been clear that the company's had having problems for a long time. There's been basically a 15-year trend away from packaged video game distribution to digital game distribution.
GameStop has been feeling the pressure. As of 2019, GameStop's same-store sales declined in 3 of the last 40 years. COVID-19 has only added to the company's woes. In the second quarter of 2020, same-store sales fell by more than 12% from the prior year, with a majority of locations open to limited customer access or curbside delivery. But it isn't all bad news for GameStop. With stores shut down, its second quarter 2020 global online sales increased more than 800% from the year prior. In October 2020, GameStop entered into a multi-year agreement with Microsoft to expand its physical and digital video game options and upgrade its stores. And the company is eagerly awaiting the launch of the next generation of consoles from Microsoft and Sony, the PlayStation 5 and the Xbox Series X, expected to arrive in late 2020. The question is, with an onslaught of new competitors and a digital world taking shape around it, can GameStop survive?
So this article, obviously, or this segment comes in and just trying to like, hey, even though there's like new things coming, like the PS5 and all that stuff, can they survive, right? As if to place doubt into. But I'm going to link this particular company, particular video down below so you could kind of finish this. And again, this is 3 years ago before the run, and they do that for a reason, in my opinion. Is to try to steer people away. But Ryan Cohen got in, and the rest is history, right? So Gabriel Bimore, I predict Ryan Cohen aiming for the net income of 3. Okay, I think that's doable, honestly, but I want to tame my expectation a little bit low. It's doable because like the last 5 years, sorry, the fourth quarter of GameStop is usually the most profitable ones, right? And especially with new title coming in, as Lynn was saying. Lynn, was it Lynn or you? I forgot who commented on the. It was Lynn, yeah. Lynn was saying that Grand Theft Auto, which is the most anticipated title of gaming industry, is coming out, right? It's going to come out in the fourth quarter. So I mean, I'm expecting good things for that. But if you look at the, let me see, hold on. Sorry. I'm looking for the net income right here from last quarter. Oh, that's not it. Trailing 12. Sorry, you guys. So last quarter, it was, we're down $300 million. So if you were to do that, difference is $300 million. So that's why I went with like 220, just off of my, napkin math here, based on the EBITDA as well, right? I think that's more important too, a little bit important, much more than the net income, because this is what Wall Street used to, well, in my opinion. I don't know for sure, but they seem to kind of look at this number rather than this number. This number is overinflated, obviously, but they seems to have it there to try to say, hey, we're actually profitable. And every company do this. It's not just GameStop here. Just the accounting trick to try to signal, hey, we're doing better, even though you're not really, right? That's just my opinion, obviously. But with GameStop, it's a little bit different because we have the awesome Ryan Cohen. You could tell I admire the guy so much. But yeah, so that's why I'm like, well, 220, kind of low expectation, and 220 is still a good amount to go by. When it comes to lowering the expectation. But actually, if Wall Street, okay, hold on, they already come up with the estimation for next quarter, 27 estimate versus last year estimation. So reported they were up 16 cents. So they beat expectation by a lot. So to me, can they kind of incur the same number? That would be nice, right? If they were able to, instead of 27, 50 cents a share. Dare I say 50 cents a share? Hey, it's possible. Anything is possible. The sale might be down, right? Even if they're down another, 100 million. But last year, if you look at the price, see, like $40 million more than they were expecting. So I'm expecting the e-commerce platform or the website's going to sell more than the actual store and cost less to operate too. I think, that's massive that and again, they don't have any executive to, muddle the water to kind of wasting money on the executive when, the chairman themselves could do it for the shareholder as well. So I think Ryan Cohen is doing something that no other company, no other board of directors, CEO could do. And that's the value. And if Wall Street people out there are smart, they're going to flock into this particular company because of Ryan Cohen and his team, And I think that's much more valuable than the actual company itself. Okay, North Star, can you talk about GME new direction? Moran says, hedge fund, I'm excited for the new opportunity. I mean, the new opportunity is endless. I think I mentioned it before earlier. I don't know if you joined in earlier. I mean, any speculation whatsoever to any company at all that, okay, so now that Ryan Cohen has the ability to invest that billions of dollars that we have as the company, as GameStop, he could do anything. He could buy any company. And my speculation is perhaps they could buy Steam or, a portion of that company and have influence on that. Now, currently, you can't buy Steam as a publicly. I don't think Steam is a publicly traded company. Steam Gaming. And for those of you who doesn't know what Steam is a platform or a website that you could go in and download game digitally. So now, if maybe he partner up with Steam and say, hey, I would like to partner up with you. And it's not off speculation somewhere, because if you look at the digital store here, you could download Steam game right there from them directly. So again, my speculation is that I'm bet you anything they know what Steam is. And perhaps they're going to invest in Steam or partner up or buy it outright. How much is Steam right now? Who owns Steam, by the way? Does anybody know? North Stuff, do you know that? Steam. And again, the narrative that, physical game and digital game and all that stuff, that narrative, gone. Like, what else can you say about GameStop that they're not doing? You see what I mean? And the media doesn't have anything right now. All they're doing is just muddle, now that they have the ability to invest into other company. What did the other people say? Oh, this is the dumbest idea ever. Really? Oh, this means Ryan Cohen doesn't believe in GameStop, bottom line or whatever. Well, what? If you are able to buy a company and benefit GameStop in the process, what's wrong with that? That's adding value to GameStop. You know? Okay, so who owns Steam? Steam, Valve. Is it value? No, that doesn't. Valve. I can't say that word, you guys. I'm sorry. Valve. English is not my first language. I am so sorry, you guys, that you have to sit through this. So Steam is a game, video game, digital distributor service, storefront developed by Valve Corporation. Okay, so who's this guy? Valve's Corporation. So technically, hey, they could buy this, you know, or own a portion of it. Oh, hold on. 50% of Valve. Valve is a privately owned company. Gabe Newell. Okay. Valve beloved. Oh my God, I can't read, you guys. What's going on? I need more coffee. Sorry, let me sip of coffee real quick. So Gabe Newell is the owner of 50% of Valve, which is owners of Steam. So the founder and leader owning over 50% himself. So it's a privately owned company, so you can't buy it right now. If you want to invest in what Steam could do, so that's my speculation. There is that they could partner up with Steam, and Steam is going to give them that digital media status there, or digital gaming download status that could benefit both parties. So who's the Gabe Newell? Hold on. Gabe Newell. Game design, finance, data science. So, I mean, it's not far-fetched that they could technically kind of partner up with this company or just buy a portion of it privately, reason being is that you could download it straight up from GameStop right there. And then my other speculation is buying gaming like a Rockstar, like the company that creates those type of game themselves, right? Or Immutable X, that's another speculation too. That's not far-fetched. Or Loopring. Because they partner up with Loopring through NFT Marketplace. Now, the reason why they kind of stay away from the crypto at the moment is because, again, regulation. So the regulation is not clear yet, so they can't jump into that yet. But it's still on the back burner. They have the availability of turning back on that platform when it's come to fruition, right? That when the SEC or the lawmakers out there tell you what is cryptocurrency, what is Loopring, how do you go about regulate that, then that is another growth factor there. So it could be 5 years from now, 10 years from now, but that really doesn't matter because of the balance sheet of the company. It's doing better. And so, the GameStop could survive currently at this time forever, with the cash on hand that they have. So the future is bright for this company. Okay. Gabriel is what? Was the net income the year before private equity was in. Oh, okay. Entered on the year 2017. So, okay. I mean, that's possible. I mean, I'm not saying that $360 million is out of the question here. With Ryan Cohen, we could do anything. Okay. Yes, I hope that is true. North Star, Steam is private. Okay, privately owned. Val owns the Steam. Gabriel is the owner. Okay, so let me see who's the owner. Okay, let's Google this guy. Gabe. Is there any private equity connection to Apollo or anything like that? I'm trying to channel Moran's here. Okay. Who's this guy? LinkedIn. Boop, boop, boop. CEO, so he owned half of it. Who's the other half, though? Oh, what is this? Oh, is that the guy?
The myth, the living meme, Gabe Newell. What you might not know about this low-key but universally liked founder of Steam is he was actually an early Microsoft employee, a Harvard dropout, and is now the richest man in gaming. The story of Gabe Newell is not only interesting, but also mysterious, and the crazy part is, with the things he has planned, he might just still be getting started with his career. His company, Valve, is the mastermind between games like Half-Life, Portal 2, Left 4 Dead, and Counter-Strike. But the thing that brought his net worth to $7.7 billion was his platform, Steam.
I did not
You already know
that.
this is the platform where everyone gets their PC games, with 125 million monthly active customers and 30,000 listed games. So today we're going to learn a little bit more about Gabe Newell's success, how he started Valve and Steam, and what he has planned for the years that come. So let's get into it. Who is Gabe Newell? Gabe Newell was born in 1962, and he started working at Microsoft in 1983 when he was 21 years old after dropping out of Harvard. He stayed at Microsoft for around a decade, working on early versions of Windows before leaving in '96. That's when he started Valve with a fellow Microsoft alumni, Mike Harrington. Gabe Newell wasn't a regular Microsoft employee. He led the development of Windows versions 1.01, 02, and 03. It's easy to forget Microsoft is one of the biggest gaming companies too, now owning Xbox, and Newell worked on gaming projects when he was there too, releasing a port for the first-person shooter game Doom, allowing it to be released on Windows 95. After being an early-stage company at Microsoft for 13 years, he was able to walk away with $500 million of stock, which he sold in '96 and used to incorporate Valve LLC and give it a pretty good head start.
Wow. Yeah, I'm gonna finish this segment here, and if you guys wanna take a look at this too. Yeah, I did not know that that's the guy, and he's have some connection to the Microsoft. That's pretty cool there. And Ryan Cohen is also shareholder of Microsoft, right? Or Apple. It was Apple. It's not necessary. You're doing fine, Mimo. Oh, sorry. Thank you. I appreciate that. GameStop sells the Steam Deck. Don't know what that means. Meaning like they're offering it through Steam, right? Some kind of partnership and acquisition sounds good. Yeah, I think so. I mean, it's not a far-fetched idea, and with that narrative kind of out of the way, saying that they're not physical anymore and all that stuff, there's digital download, that's done. Like all these theses about GameStop. Oh, hold on one second.
New company was still...
Wait. Did I see something about GameStop here? Hold on. I just saw that.
Side dialed in.
logo.
It was hard for them to find a publisher for Half-Life. Publishers control the distribution of the games, and back then, things were done in the form of CD-ROMs. So developers and publishers would team up to print those CDs and then distribute them to stores like GameStop. While Newell, of course, had the credentials, placing a bet on Valve as a new company was still a huge risk. But that being said, publisher Sierra still took a chance on Valve, and this risk would pay off after Half-Life sold over 1 million units in just 6 months. So Valve had definitely proven itself with this launch, but just 2 years later, Newell's partner in crime and co-founder Harrington left the company, leaving Newell as the sole leader of the business. Gabe Newell was definitely always the visionary, and still to this day holds a 50.1% stake in the company because he wants to keep this control. Immediately after the initial success, Newell started working on Half-Life 2, renegotiating with Sierra with more leverage and getting the rights to distribute his games digitally. After Half-Life, things would dramatically speed up, with the studio going on to release a bunch of mods including Team Fortress Classic, Counter-Strike, Day of Defeat, and more. By modding the base Half-Life game, Valve could create a bunch of unique IPs very, very quickly. Half-Life's engine was based on a modified Quake 2 engine, a derivative of Doom and Wolfenstein, the godfathers of all first-person shooters created by ID Software. Iterating on this Quake 2 engine, Valve released its own in-house engine called Source, which remains one of the most iconic game engines even today. All of Valve's single-player titles and Dota 2 run on the Source 2 engine. But 2002 was when Valve would evolve beyond just a game company, releasing the beta version of Steam to the public during the Game Developers Conference. Steam being the online platform, 300,000 users, and Newell was absolutely overwhelmed by the response, launching an official version in 2003. Initially, Steam was just a way for Valve to provide patches and updates for their games, and of course sell titles without a CD way beyond this being mainstream, and in 2005 it expanded to offering third-party titles, with Ragdoll Kung Fu becoming the first non-Valve game to arrive on Steam. Steam is the dominant game distribution platform. However, Sony with PlayStation, Microsoft with Xbox, and Nintendo with the Switch don't allow Steam directly on their devices, but it took these companies a decade to catch up and switch to primarily cloud rather than disc-based distribution. Remember that publisher problem we talked about before? Well, that doesn't exist anymore because now even solo developers can self-publish games, with indie titles such as Stardew Valley, Hollow Knight, and many more enjoying massive success without the need for traditional middlemen and brokers.
Wow.
Today, the Steam platform...
Yeah, I mean, it's kind of, I don't know, I think this is the direction. But again, you know, it's just a speculation. I'm sure there's a reason why Ryan Cohen or GameStop lists Steam gaming now, or a digital store for that. Perhaps just to give the signal, hey, we'll partner up with Steam. North Star, I like to dive into Valve, Steam, more like this. Okay, thank you. Steam Deck is a mobile gaming device, and it sold at GameStop. Okay. Show us the Steam Deck. It's still Steam Deck. Which one? Can you provide me a link? Oh, you mean like the Steam that you download game from? Oh, is this what you mean? Right here? Yeah, you know, I have an account with Steam too, and I've been downloading from them, you know, even before I got into GameStop, and now that GameStop has the stuff, of course I'm gonna support the company that way too. And you know, the fact that they keep the pulse on the gaming reward as well, it shows that connection there. It grows player Half-Life, and Counter-Strike is the go. Steam Deck isn't a device. It's a device. Oh, Nintendo Switch. Okay, my bad. Okay, let me see what Steam Deck. like this one. Amazon, Walmart. So can you get it from Gamestop website? Boom. Okay, that's pretty cool. I mean, I'm not aware of this, but yeah, I mean, look, Pro member, you get, you know, the deal that, you know, the GameStop always have for a Pro member, and then you get even more right here, choice, option to buy into it if you like to do that. So that's pretty cool. Okay, thank you, Northstar, for steering me to this topic here. I have to dive a little bit deeper there on that, but yeah, I appreciate you for that. That's not the direction of my video today on my live stream, but yeah, I hope you find something valuable here. And a half now, I'm kind of like tired and I need to eat something, so I'll just end it here. Appreciate all of you for tuning in and just kind of waste some time with me here. And Northstar, appreciate you coming in. Jay, thank you so much. Lionel, appreciate you. Gabriel, thank you so much for all the questions. And Lind, of course, appreciate you as well. All right, guys, that's all I have. And we'll see you when I see you.